So we got data today that showed that U.S. existing home sales were now at the best level since 2007. So I just want to make a statement here, and I think the data bears me out, and that is there never really was a housing crisis. And I have been very firm on this point for a long time. What was a normal housing correction that came about or that should have come about as the confluence of several factors. One being a sustained period of very high levels of housing starts, okay, where historically once you get up around 2.5 million, 2.6 million annually, you start to create a little bit of an oversupply. And that was exacerbated. The problems were exacerbated. The Fed, trying to fight inflation, took interest rates from 1% to what was it, 6.25%. So a huge increase. A lot of people had those adjustable rate mortgages on the subprime mortgage. Now, as far as the subprime mortgages, I've always said, and this is true, it was a tiny fraction of the overall mortgage market. And the problem, the reason why it ended up to be this catastrophic decline was when it started to correct, the Fed remained on the sidelines. And then when we had some of these big speculative positions, most notably in Lehman Brothers, and it caused the bank to fail, it set off a cascade effect, a domino effect, and again, the Fed did nothing. And it was only lending in a very limited fashion against the highest quality collateral, which were treasuries, and banks, that's only a part of what they hold, when in fact, all of the assets that any commercial bank owns are assets already pre-approved by the government. That means the Fed and the controller of the currency as viable assets that they can post as collateral. Yet the Fed did not take it. So it literally, you started with a little tiny brush fire, and it was the Fed that literally kind of threw gasoline on that brush fire. Now, after 4 or 5 months, once it realized that it had to lend on an open-ended, unlimited basis against all collateral, the whole thing stopped. And now we're back, prices have come back, activity has come back, supply has whittled down to a couple of months now, when, it was 11, 12 months supply. So there was no crisis. There was a correction that was bungled, and it was kind of tied into excessive speculation on Wall Street, which again, you can blame the Fed, because the Fed is the regulator of banks and Wall Street. They just, kind of look the other way with all these speculative instruments that the banks piled into. So here you go. You can have your clown god that you think called something totally ridiculous. The guy's a jerk and got every single thing wrong ever. I was the only one who got every single thing right and continue to get every single thing right. So, existing home sales at 2007 levels. And by the way, the housing market recovery is not over, because we're still only about 1.2 million housing starts annually, when the 40-year average has been like 1.5 million. And, the population is now, 320 million. So you got to be at least 1.5 million in annual housing starts to even begin to talk about a slowdown in the housing market. We're not even close. And by the way, like I said before, most housing market tops have occurred when we got up around 2.5, 2.6 million housing starts annually. So we're nowhere near that. Nowhere near that, folks. So there was no housing crash. It was an aberration. It was a botch job. And once they, corrected it, it all went away. Everything went away. Everything. And matter of fact, didn't just go away. It exposed the fact that we're way behind the curve in terms of resupplying the nation's housing stock. Very important. Okay? Bye.